The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow down 53, NASDAQ off 29, S&P's down 10.5. We have the gold contract down $31, silver's off 57 cents, oil's down 90. We have the 10-year note up 4 ticks. The bond, 30-year bond up 6 ticks. King dollar up 411 ticks. And they're crushing these commodities out here. I got a screen up with commodities, and there's only one commodity.
Why don't you bring it over so they can see it?
Inside this, you get silver down 3.5%, coffee's down 3%, cocoa's down 3%, gold's down 2.5%, crude's down 2.5%. There's only 3 commodities that I have on here, which is nickel, orange juice, and natural gas. That is up. So volatility, but right now the volatility, the volatility is always in the commodity market, but this is a pretty good hit.
To the downside, right?
Yeah, and it's funny. They say that the dollar is doing this. The dollar's only up 400 ticks, man. It's pretty wild. And let's go over to our man, Mr. Kevin Hinks from TD Ameritrade, Thinkorswim. And don't forget, folks, every trading day, 12 to 1 Eastern Standard Time, Kevin's got a great show with Scott and Cindy. Swim lessons, no matter where you are in the world, folks, right on your cell phone, TFNN.com, hit Tiger TV. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everything going, guys?
It's going good,
well,
man.
Oil's kind of taking over again, isn't it? Doesn't it feel like oil is kind of driving the market again this morning?
Oh, it's pretty amazing, actually. You know what's wild? What I was just saying to Tommy, Kevin, is that, when you look at, and it's really funny when this happens, folks. You look at headlines, and yesterday you were looking at headlines, and they were saying that money was going into gold and bonds actually turned negative. I'm saying to myself, this is amazing that they can put a headline across like that, and evidently the headline was written before it was happening. And this morning they're saying, well, it's the dollar that's bottom line hitting all these commodities, and the dollar's only up 400 ticks. You know what I mean? So it's like, okay.
Right.
My take is they've been up so far that it's a pullback. Okay, it's not the end of the world.
Right. Oil is clearly, once you get into Tuesday late in the day and Wednesday morning, the inventories kind of take over the news cycle in oil.
Yeah,
right?
well, that's
but
right.
I'm kind of surprised because James Buller, an FOMC guy, is speaking this morning, and he's being a little hawkish. I'm seeing some of his comments. I'm surprised bonds are doing well. Either they're not listening to him, or they're rising, even though he's talking about inflation overshooting the 2% target. I thought that would make bonds a little heavy, but not so much.
No, I'm with you. I know. And the oil market, right now you're down $1, folks. We're down 138,000 contracts, which is not basically a huge amount. But there's no doubt that it likes bringing the market flat to slightly lower. There's no two ways about that.
They're waiting for the 1030 inventory number, IDIA, so that'll be a big one for them.
Yeah, we love being on at that 1030 inventory number.
It is.
That's fun.
It is, man. It is.
Yep.
So what are we going to talk about today in swim lessons, Kevin?
Today we're going to talk about one of my favorite things, because this is more of an intermediate topic. It's synthetic option strategies.
Okay.
Which means creating things using other things, right?
Yes.
Being short a future and long a call is actually creating a synthetic put, right?
Yes.
Being long a stock and short a call is creating a short put. So we're going to create things using other pieces today.
Nice.
Kind of a mind-blowing show.
I like those complex
one of my favorite things to talk
strategy sessions, yeah.
There's no doubt, man, because what does happen is that those strategies, that's what big money is normally looking for, right? Because they like to calm down the portfolio, basically, right?
Well, when you were trading a pit, right?
Yes.
You were always looking for. There's 2 ways to buy a put. you can either buy a put outright,
Yeah.
or you can buy a call and sell the underlying.
Right.
That's like buying a put. So you were always looking for the cheapest way to do it.
Sure.
Right? If that put's trading at a high price, you sell that put and then you try to synthetically buy it back.
I get it. Okay,
And
cool.
and it's just that. It's finding out the cheapest way to do something.
Right. And in what has happened in the option market now, it can really get very inexpensive, particularly because when stocks are trading at, whether it's $70, $80, $90, $100, you know what it is? It's like, why would... I can understand, I guess, why someone buys a $100 stock. But when you're talking about small premiums, which we are talking about now because the VIX is so small, it's like, that's tying up a lot of money, not for a huge reason, I think. Do you know what I mean? Well,
Right. The problem with this time of year and low VIX is if you're selling options, you're not getting paid a lot for
Right.
the risk you're on.
Right.
So you got to figure out a strategy like we talked about yesterday to make money, still collecting theta every day, still collecting that decay, but figuring out a way to exploit the fact that volatilities are low and may go back up. Because if you're selling options and you're selling low, that goes against your general.
Excuse me.
You're actually selling low, so we got to figure out new ways to make money in these markets, and we got them.
I like it. And, of course, what's going to happen as we just move into the end of the month, we got window dressing, which is always a little action, right?
Oh, absolutely.
Well, listen, folks, 12 o'clock right here at TFNN, swim lessons right on your cell phone, TFNN.com, hit Tiger TV. Kevin, thank you so much, man. Look forward to the show.
Have a great day, guys.
Thank you. You stay right there, folks. We're coming right back. Dow's down 25, Nasdaq's off 23, S&Ps are off 7.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, you have the Dow Industrials down 24, Nasdaq's off 24, S&Ps are down 7. And let me just pull this up for a second, because when I had pulled the TAS scanner up this morning, you know, Logan did the show. I had him on the last segment.
You're talking about last night. Unfortunately, he had some technical problems, and he didn't do the show this morning, just so everyone has
right.
Yeah.
This was, but last night, and what is amazing, folks, okay, is that when I'm putting this TAS scanner up, and let me just see, dashboard. And, okay, no, the wrong one. I'll find this one, indices. There we go. And when we were looking at it last night, it was actually blowing my mind. I mean, I know the market's been climbing up for the last 6 weeks, you know, but when you look at this, what we're looking at, folks, if you're driving in your car, we're looking at the world indices, well, most of the world indices.
And these are the market profiles, though, to be clear. This isn't like a positive, negative for today map, right? I believe.
That's
just so
correct.
You can be in like a positive area of the market, you know, above market profile, but maybe be down for the day. I'm just right.
You could.
Or you could be slightly negative. You know what I'm saying? I'm just.
When these are all green,
Yeah.
those markets have been going up for quite a while.
Yes. No. They're
just like ours. Okay. So we you know.
Sure.
And that's unusual. Yes. I mean, this is like you know, since the Fed. Well, no, since we hit the bottom 6 weeks ago, you know, it's pretty intense that whether it's Colombia, whether it's Mexico, whether it's South Africa, whether it's the FTSE, whether it's the DAX, whether it's the Shanghai, even the Shanghai, which is, you know, they come off the bottom. And that's
for the weekly profiles.
Yeah, and that's based, you know, that's saying, it's not saying where the market's going to go, but what it's saying is that the world is in an uptrend right now. And, you know, somehow it looks to me like the highs are probably going to get tested. You know, the ABC projection doesn't go to those highs, but it's almost like this is too easy, man. Meaning that, is it really just going to go to the ABC projection? And markets don't, you know, they're not that cooperative most of the time. And, you know, if we take a look at the SPY, the high in the SPY is, well, no, if we take a look at the cash S&P, the high is 2116. And the projection is only 45 points over this. It's 2087. 2081 is the swing point from December 29th. The next swing is 2104.
Just when you say so quickly the projection, I know what you're talking about, but I'm not sure everybody knows what you're talking about. You're talking about the ABC on the right? Is that what?
I'm talking about the ABC projection that we're in right now, right?
Okay.
All right.
You don't want to go through that? All right.
The A point on this is the low of the 24th of February, which is 1891. The B is the 2091. And we took it out. We took that baby out on the 11th.
Now, why wouldn't you go for the A?
Down at the bottom?
Yeah. I mean, this is why I ask these questions. I know that you paused there saying, I can't believe I have to explain this, and we saw it, but that's, I mean, I thought, just so before you went through that, I did think the ABC, just first glance, I know you've said it many times, but that's why I want to walk through this stuff, you know?
Because in ABC, the A to B is a straight line move, and we had already did a retracement back from the 1946 down to 1891.
Okay.
It's not that it would be, you can, what happens is that on an ABC structure, up or down, you're talking something that's not really scientific.
Yeah,
you know
there's
what I mean?
definitely interpretation. I think everybody else knows that. Because that looks like a straight line move to me, the whole move. Just so, and I'm sure that could be interpreted that way by some people, but you're just looking at it a different way, which is cool.
And what happens, what happens, I can tell visually, I'll put it up, I can tell visually that was a .382 of this move. And when that does that, that negates a straight line move. Now what does happen, now this is where this gets really wild, folks. If we take this and we put this on a weekly, it's like, okay, on a weekly, that's all we've done is a straight line move. So you can make a case if you're a bull saying, hey, if we get a pullback, is this a much larger ABC on a weekly basis? Now, what's really cool is this, is that the DAX in Germany is, what happened with the DAX in Germany, and how we get over this is going to be a big deal. The DAX in Germany looks like it has a small ABC happening. I'd like to see some follow through here, and what it is that your B point on this is 89.99. And we took it out with volume. It hasn't followed through yet, but that's going to be a heads up. A larger heads up is we're still dealing over in Europe, and the FTSE is right at it. So if the FTSE can get over this B point, that would, see how this baby's laying out? It's right. The FTSE right now is just laying right at that 6,200 area. So what I'd be looking for here.
So when you said B point, is that the B point there?
Yeah, these would all be B points. I mean, when it's that close, it's like, okay, so 62.04,
okay,
62.16. What you're looking for, okay, where's it going? And the bottom of this is.
Can I just go for a second?
Sure.
Where are we going? Where's the A, B?
The A would be right there.
Okay.
The A would be 58.45. That's a big A to B. 58.45 to 62.16. What I'm looking for in this one, so the correlation what you're looking for in this one is that if it does break over, it already has the volume. If you get it, that's saying that will overtake the highs in the FTSE, and then that would say to me that the probability is much higher that our S&Ps will overtake the highs also.
Just, sure. There's a bunch of ABCs I see in that chart. One of them looks completed from the very bottom of February 16th.
That's correct, because we did two separate we're on the second ABC even on our own S&P. Coming off that bottom. That's
when you complete an ABC, don't you do like a reversal usually?
You do.
Okay.
You do. You don't have to, but that's once you finish an ABC up or down, bottom line, most times that you're going to get a pullback. And the real question is like, is that the end of the move, or is that just another ABC structure going topside once again? So 10:30, this is pretty good. So we're at 10:27. I'm not quite sure what's happening with it's just a little bit slow. 10:30, oil numbers are coming out, and this one's going to be interesting because right now this oil is trading at the 41 bucks. We're definitely coming into let's say driving season, but we'll see what happens with this baby.
It'll be interesting to see with oil down already big what happens with those numbers. Usually you don't see a big move ahead of these inventories.
And in the last month, each and every time that we did have oil down, it snapped right back. It not only snapped back, man. I mean, when these numbers come out, it came out all over the place. You stay right there, folks. Tommy and I are coming right back. Dow Industrials right now are down 25. You get the NASDAQ off 23. S&Ps are down 750. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome, folks. We have the Dow right now down 38, NASDAQ off 25, S&P's down 8, and we'll see where this baby wants to shake. Right now, so crude inventory has rose 9.36 million barrels. That puts crude, we just went from, we're at 40.27 right now. So if we take a look at this will be interesting to see just how this thing's going to shake out, because that's not that bad a hit.
Well, it's been about 30 seconds since the news came out.
Right.
Yeah. We see that this takes at least 5 minutes to find a direction from the news.
Oh, yeah, no doubt. So here, we'll leave that up, and we'll get you what it looks like they're saying fundamentally. So CLJ6. Okay, so it's rejected. Okay, so let's see here. Oh, this is interesting. Look at this. Crude, would that be crude plus 300, plus 900 and...
So far, that's 9.3 million barrels, which is what it was,
okay,
which you just read, but the estimate was only 2.5 million.
That's a lot more.
Yeah.
And gold and oil is going up, folks.
Yeah.
Wow.
Definitely.
That's...
Like they talk about demand numbers in here as well.
Demand fell 497,000 barrels.
Well, that's distilled demand. These are important details. Gasoline demand rose 45,000. There's so much in these inventory numbers in terms of just, much more than just the top line number of inventory that those guys on those desks are probably rifling through it all right now, and that's where the supply and demand is jumping around for a whole 50 cents right now.
I know.
Yeah.
So, okay, so crushing oil inventories. Cushing fell 1.26 million barrels. The crude output was down 0.3%. Demand fell, U.S. fuel demand fell 1.6. Gasoline fell 0.2%. Jet fuel is up 1.45%.
Sorry, where are you? 1.45 what? What do you?
Percent.
Okay, demand.
Right. Well, we'll see where it shakes out. Let's see what it's doing to some of the stocks. Okay, so we'll go over to ExxonMobil, XOM. That's flat. Chevron's down, $1.68. That has been down. That was at 93.62, but that's still down. I think USO, is it USO? Yeah, USO, the oil fund right now, that's down 26 cents. Look at that, that's volatile too. So bottom line is that we'll see where this baby does settle down. This thing's being slow.
Yeah.
It's it's pretty impressive though. It's pretty impressive that it hasn't tanked, because we've gone up dramatically. So that it's not tanking.
I wonder if it factors in that we're already down $1 for the day too. Just as you know what I mean.
Yeah. Just that $1 is nothing compared to where we've been. You know what I mean? We just went from $28 to $40 in 6 weeks, right?
Definitely.
So I suspect between coming into the driving season, that should make a difference. And then Andy was talking about yesterday, there's going to be an OPEC meeting in the middle of April.
Okay.
And he was thinking that until the middle of April, it should hold a bid underneath it.
Okay. Yeah.
Our phone number is 877-927-6648. And we got a slow chart up here, folks. Yeah, that oil market, it's resilient. We'll see whether the next 20 minutes, if it can keep holding that 40 bid. But holding that 40 bid right now is a decent bid, man.
Yeah, no, it's holding up well for those numbers, for sure.
And if we go over, let's go take a look at the rest. Let's see. So the dollar index is still up 471 ticks, which, by the way, is not a lot. It's particularly not a lot when you look at the commodities and how these commodities, silver is down. Well, here, let's go look at silver. Silver's down 3.7%. Gold's down 2.4%. Every commodity is down except nickel and orange juice right now. If we go over and we take a look at the silver market, SIK 6. Look at that bar, man. Mm-hmm. That's intense. So silver, folks, has done 51,000 contracts, which is big contracts. You're coming into 85,000. Now, the swing point, you have two. This gets wild. So silver hasn't got to the minor swing point yet, which would be $15.16. That was left from March 10th. The lowest swing point, actually, where everything silver took off was $14.60. So this will be really wild, because what I've found is this. So picture this. If, in fact, if we get a rejection of price here, and it hasn't made even that minor swing point, that would end up being bullish inside the silver market. Because you had an expansion of volume from where we were the last few days, but I don't expect you're going to get the 85,000 that we're actually coming into.
Sure.
We're at 51,000 right now. If we go over to the gold contract and you look at the correlation inside the gold contract, the gold right now is down $29. It's been down as much as 32. It has volume behind the move. It's 186,000 contracts, but that 186 is also coming in. Now, the difference is gold did break its swing with volume. That swing there, it's a minor swing, but it broke with volume. It's 185,000. So gold can get back to that 1196 area. That would be coming against the strength.
Excuse me.
We'll see whether it has lighter volume when it gets against it. Then, now what you also have, folks, is that if gold closes, we're at 12.18. If gold closes over 12.26 today, that's going to be a rejection of that price. and then you're dealing with the highs of that level, which is 1236. So this is going to be wild. Watch this filter and shake out. If we go look at some of the larger gold stocks, Rheingold Resources is down $4, but that's on light volume. This stock had already gone from $60 up to $95. We look at let's look at an Eco Eagle. An Eco Eagle's down 188 with 900,000.
Excuse me, my allergies are getting me a little bit down here.
I know, going into 4 million. So these little babies are pulling back, and the pullback thus far in the equities have been on lighter volume. Oil's basically staying flat. We'll see whether I can basically catch a bid. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Our phone number is 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the oil market trading out at $40.25. That has moved from 40.75 to looks like 40.20. And
yeah. Looks like it's going to take some time to shake out, right?
Yeah, for sure.
And we'll see. Bloomberg's still up. It's whipping back into shape.
And there hasn't been a lot of movement inside the notes or the bonds. Notes right now are up 3 ticks, bonds up 7 ticks. And what we do have is this. So as we go into this weekend, this is where this is going to get wild. is that tomorrow will be the last day that the American markets are opened. I believe London may be closed on Good Friday. I know, well, we are, Asia is not. And, of course, commodities are not. So it would be pretty wild watching, what ends up happening with the dollar versus some of these commodities. And in particular, what's going to happen as we come into the close out here tomorrow with gold. Gold and silver. Because tomorrow will almost be like the close of Friday, and if they can get it going, meaning downtown or uptown, downtown more so, because if they can crush it, they'll try to crush it. But when I look at where the dollar is right now, the dollar, folks, okay, the dollar index, the dollar index is coming right into, it just, when you look at some of these correlations, this is where it's just absolutely amazing. We've only done 9,500 contracts today. Now, I've traded this contract. This is a nice contract to trade. And you can still see, if you look at the top of the Bloomberg, it's still a tight contract, meaning, the spread is very tight, okay? But when you see what it's doing, like it's going into 30,000 contracts. So today, with 9,500, it'll probably do around maybe 10,500, 11,000. Because the action inside this also is loaded 8:30 in the morning, 9 o'clock in the morning, because of the fact that the euro is 60% of this. So, that's kind of what you're not basing the whole thing off, but it's quite a bit of it. Now, that being said, what you're doing is that you're also coming into 71,000 contracts. That was the downdraft from March 10th, and then I happen to know when you come over here, when we were down, that was 66,000 contracts in February 3rd. So that correlation, basically is saying that you don't have buyers inside the dollar index as that continues to climb higher. Well, it's only climbed up for 3 days. So we'll see what that does. That does shake out. The NASDAQ itself, yesterday the IBB was helping the NASDAQ get to higher price. As soon as we get these quotes back up, I'll pull that IBB up.
We'll keep checking on oil as we have to fend for ourselves away from Bloomberg.
Yeah.
Yeah, and look at that. It is interesting. That's the 5-minute bar, of course, at 10:30.
Yep.
And then we've had almost 15 minutes of just sitting there.
And
for quite a big report. It's interesting that it hasn't moved that much, yeah.
And, so we've gone from, is that a 2-day or overnight you have right
I was just
there?
pulling back.
Yeah.
This is just going back. This is just last night.
So we went from 41.20 last night to 40.20, right?
Yeah.
So that's nothing, man. That's saying that this oil contract to me still wants higher price, because they should have been able to slam that thing big time.
Yeah.
And
yes, no, definitely.
As we move through the day, people are going to say, okay, if they can't get it down, bottom line, let's see if we can get it going. Let's see if we can get it going topside.
Maybe it's getting going right now, right?
Yeah, and folks, if you haven't test drove that Nadex platform, this is a great time to do it. You can go over to our website at TFNN, hit the banner. As you bring it up, they'll put $25,000 of paper money into your account, and whether you're trading gold, whether you're trading silver, whether you're trading oil, the indices, currencies, it's a defined contract. It trades in a tight spread in correlation of where these babies are trading. You're going to pay premium, of course, because it is a options contract. We take a look at the, okay, I'm almost, yeah, well, let's try it anyway. I'll say, let's go see what's moving inside the NDX. So what's happening, folks, if you're in your car, that's good, that worked fast. Okay, so inside the NDX 100, the lead is inside the NDX 100 this morning. You got Amazon's up $8. You get Electronic Arts up 90 cents. You get BMRN up 94 cents. You got Dollar Tree up 79. Taken away from it on the way down is Vertex Pharmaceutical down $4. Seagate Technologies off $1.45. You got Gilead off $2.97, and Discover is down 77. We go into the Dow Industrials. We take a look at the Dow. The strength inside the Dow is United Health. That's up $1.38. Visa is up 74 cents. Big Mac is up $1. Nike is the leader on the way down. That's down 266. Chevron is off 182. If you go over to Nike for a second, so Nike came out with their numbers. They had good numbers, and they were saying that that pulled back. It's pretty amazing how much this company makes, man. I mean, it's just huge. But what they were saying is that their currency, the U.S. dollar currency, basically gave them a little hit. But look at this stock. So this is a stock, folks, in 2009 it was trading at $11. It's hard to believe, isn't it?
Yeah.
You know, goes all the way up to 68. Huge numbers. Huge numbers. Now I'm going to go right back to that oil contract again. Yeah, that oil contract wants to move. So oil, it's been rattling around this 40.20 to 40.47 level. And we'll see whether they can catch a bid. Now, what ends up happening is that if, in fact, oil does catch the bid, what you're going to see is that the first thing that's going to stop moving is that S&P and that Dow Industrials. Because those oil companies will catch a bid. Oil drags everything up. And isn't it really weird that let's picture that you're in the market, you have your 401k in the market, all that, and after this downdraft, you know that you want cheaper oil prices, but you know that, oh my God, oil just went from 100, down to 40, and my portfolio went down.
Sure.
So it's really a question of, do you want your portfolio to be flat or up?
Sure.
Or do you want oil prices to be low?
Yeah. Because the market's going with it, right?
Because exactly. There's no doubt, man. There's no doubt about that.
You can just minimize that to get back.
All right, should I just put, okay, so minimize that. Oh, good, okay. Yeah, and that's what's happening. So you get oil getting a little bid, even as that gets a small bid, the Dow is only down 20 now, it's down 40. Not that that's a big deal, but, guess what? It's somewhat. The bonds are the things to watch. Yesterday, what you did have at 1:30, someone hit those bonds pretty good. Tom O'Brien, folks. Our phone number is 877-927-6648. Dow right now is down 22. Nasdaq's off 26. S&P's are down 6.5. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 27. You get the Nasdaq off 31. S&Ps are down 750. And our man, Mr. Basil Chapman's coming up next. Now, Basil is going to be doing a workshop also.
He is, 1 week from tonight.
1 week from tonight. That workshop is going to be the coming 3-month outlook in the market and which sectors could rally or fail.
Yeah, so this is going to be a 90-minute workshop. Most of the ones we do 60 minutes. Basil's got so much information. He says, can we do 90 minutes? I said, sure we can. So 6 till 7:30. It's for subscribers to the opening call. If you haven't tried it, you can sign up for a free trial. If you've been in there before, you can just sign up for the newsletter, get a month, and there's no reason to wait till next Wednesday. We always say it. I mean, it's a daily newsletter. Came out this morning. Get in there, get it every morning as you're leading up to it, get acclimated to what Basil's doing, and then, attend the workshop. It'll be archived, of course, and he'll be in there for 90 minutes, kind of walking you through what he's seeing in the market and what's coming up in the next 3 months from his perspective.
And which is pretty cool, folks. Okay, so let's picture you have the newsletter for a month. And for some reason you can't make it, next Thursday. Well, it's archived. You can go over it as many times as you want on your page.
Definitely.
So you have zero risk here. If you like the newsletter, you'll get charged the following month. Is that correct?
Yes. Well, if you're in a free trial, so you get a 30-day free trial, you're charged nothing for those 30 days. You can cancel at any time.
Right.
And, if you want to continue after that, then you start getting charged after your free trial period of 30 days. Right.
So check it out right in the front page. And, of course, don't forget, every trading day, Basil's on 10 to 11. And, of course, we get Basil coming up next. You get Swim Lessons. We got our man, Mr. Steve Rhodes, Dave White. I'll be back this afternoon. Andy was on last night, and remember, no matter where you are, folks, if you haven't tried the cell phone, try it, just to try it. It is so cool how that HD comes across on cell phones.
Definitely.
It's smaller, so it seems to look clearer because it's smaller, but that's my perception on it. Let's go over before we close off here and take a look at that oil market once again. She's hanging there. Yeah. She might even be building a little strength to a little small ABC intraday on a 5-minute basis. That would be 420 to 460. That wouldn't be bad. 40 cents get you back up to 480. And there's no doubt that where that oil goes, which is just really wild, man. You can see why it would drag it up. But right now, bottom line, folks, is that there's just not enough selling in this market to get to lower price. So my bear suit is in my closet.
Where it's been.
I know, man. It's hard to believe, man. It's really blowing my mind. What's so funny, folks, is that Tommy and I met some listeners at when we were at O'Keefe's. Okay. March 17th, right?
St. Patrick's Day.
St. Patrick's Day. And this guy's introducing me to this other guy and telling him what he does. And he says to me, he's always a bear. That's what he said to me, You were talking with the other guy.
Okay, sure.
You
find that surprising? I don't know. What's the story here? I think everybody's like, okay, what
it was is that I told him that I've been a bull since the bottom. He says, really?
Okay, sure. Nice, yeah.
The bottom of the last leg down.
Last couple months, right?
Exactly.
Yeah.
But it was pretty funny, man. It was like, oh my God.
Definitely.
And I was telling him that the bear suit's hanging in the closet.
Totally. I remember that.
Yeah, exactly. Wild one, I'll tell you. Anyway, so what you're going to have out here today, so check this out, folks. What you're going to have, once again, you're going to have low volume. So the real question is that you can look at this two different ways. You have low volume that's going against, a couple of high volume days. Like yesterday we had low volume, it rejected lower price. So if you reject lower price and you go up, that's low volume once again. So it's still a market, to me, that's saying wants to go higher. You stay right there, folks. Man, Mr. Basil Chapman's coming up next. Dow's down 27, Nasdaq's up 32, S&P's up 8.5. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.